Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for week commencing the 29th of July. Now this week arguably being one of the biggest, if not the biggest and most important fundamental week of the year. We've got the announcement of the Fed interest rates announcements on Wednesday evening UK time, and it's been widely expected that there is likely to be a cut in interest rates, possibly 25 basis points, maybe even 50 basis points. At the moment, 25 basis points is looking more probable, and that is sort of also expected to be sort of well priced into the market by now. Nevertheless, the statement from Mr. Powell supporting the interest rate announcement decision is likely to create quite a bit of volatility and also sort of set the tone and direction for the dollar going into the sort of forthcoming weeks, months, and possibly in towards the end of the year as well. So quite an important week and quite an important set of data for the markets. Now, let's take a look at a few markets here that we're keeping a close eye on in the trading room at the start of this week. So the first one, if we come and have a look at one of the dollar markets, now, of course, all of these dollar markets are likely to be, impacted on the Fed announcement. One of our sort of preferred at the moment and that's looking sort of quite interesting is the Aussie dollar. And take a look at this, we can see that the Aussie has been sort of quite weak, certainly of recently, and more longer term as well here on the weekly. The market at the moment is sitting right on top of a key level, this 69 level. You can see here on the daily, it's a good support and resistance structure. The market's in a solid weak move, sitting above it at the moment, and just below that, well, we've got a nice trading window below that, down to around the sort of 68.5 level down here, and beyond that, well, possibly even down to sort of 68.20 down here too. So if we take a look at this on the 4-hour time frame, you can see here on the 4-hour, and indeed on most of these time frames, we've got nice solid short trends in this market with pretty good geometry and pretty good structure as well. So we're looking for a break underneath this sort of consolidation that's building here on these sort of mid to lower time frames, and looking for opportunities underneath 69 with a possible move, sort of near-term move down to around this sort of 68.50. We've got a level marked in just above that here, and you can see if I zoom out, there's a bit of a support and resistance sort of structure just above that sort of 68.80 area here, and then below that another minor one at sort of 68.650. Below that, of course, we're then getting into those daily structures, and that sort of gives us that move down to sort of 68.50. So some very sort of decent size potential trading windows underneath this 69 level. Now, if we come and have a look at the US indices and take a look at the Dow first of all. Now, whilst we've got the S&Ps and the NASDAQ sort of pushing on to all-time highs at the moment, the Dow has been a little bit of a lagger. It's been the one that's been sort of dragging its feet. So this is we've seen this really with a bit of divergence coming into these markets. You can see whereas the Dow and the S&Ps have been pushing up to, or the S&Ps have been pushing north of 3,000, the Dow over sort of recent trading sessions has been drifting back and sort of coming back towards this 27,000 level. And this is on the back of sort of weaker momentum as well. Having said that, if those indices continue to be bullish, if we get a cut in interest rates, that's supportive of higher stock prices. The markets, we can look at this sort of market here and look at the 27 level as possible support. And I'm certainly looking at this as possibly benefiting from the sort of lower interest rates, as indeed all stock prices as well. So the market here on the daily time frame is also starting to look sort of quite interesting. We've started to get some buying action coming in this week, with support coming in just above this 27,000 level. The market's also within the moving average zone here as well. So keeping an eye on intraday opportunities towards the long side here for the Dow to catch up. Now, if things do turn around, and they quite possibly could with all this economic data coming out, I'm looking at the decision point here for things looking more weaker is the 27,000 level. So if the market breaks underneath here, then we've got 27,800 as an easy move. Then below that, 26,500 as the next sort of trading window. And I'll certainly be looking at changing my bias straight away if the market sort of breaks below 27 and we start to get a move underneath 27, and we've got these trading targets underneath price if that happens. Now, from the commodity front, the metals here are starting to look a bit more interesting as well. Gold and silver in sideways consolidations. Platinum, I think, is probably got one of the sort of cleanest structures at the moment in out of all of the metals, and looking quite bullish as well. If we take a look at this on the weekly chart, we can see that there is a trading window that I've spoken about a number of times before between 850 and 900, and you can see that now the market's taken out 850, the market's sort of moving up sort of pretty nicely, and we're looking for ultimate sort of target areas around this sort of 900 level. On the daily chart, we can see here on the daily that once 850 has now been breached, we've now got a nice uptrend formed here with moving averages in the right order, convergence on the indicators, and the market's just drifted back into well, sort of a fair value area. It's still a little bit off the moving averages, but it has retraced some 50% off its highs up here towards 890. That's not far off the 900 sort of level that we had there as our ultimate target. So coming down to the lower time frames and looking at the 4-hour chart and the 8-hour chart, you can see that the market's coming back into the moving averages here in context of a very good structured trend. So we've got nice trends forming here on these markets, much better and much cleaner than gold and silver. So we're looking for sort of breaks of the highs of this sort of consolidation, and looking for continued long opportunities on this up towards that 9,000 level. So there's a few markets that we're keeping a close eye on in the trading room at the start of this week. It's likely to be quite an interesting week in the markets, and I certainly hope this helps. Look forward to speaking to you next time. Bye for now.